Hello, welcome back to all. Today we are discussing about FTA, foreign direct investments. As per RBI Bulletin June 2025, India's net FDI inflow fell by 96% in financial year 25 in comparison to financial year 24 despite rise in its gross FDI inflows. India's 90% of FDI is now under the automatic route. FDI inflows into India surged to USD 81.4 billion in financial year 24-25 from USD 71.28 billion in financial year 23-24, marking a significant 14% increase. About foreign direct investment. It refers to the investment through equity instruments by a person resident outside India as unlisted Indian company or in 10% or more of the post issue paid up equity capital on a fully diluted basis of a listed Indian company. Consolidated Foreign Direct Investment Policy 2020, Foreign Exchange Management Rules 2019. These are the governance and regulating body. Gross and net FDI, total investment made by foreign entity directly into the productive assets of India is called gross FDI. Difference between inward FDI flows and outward FDI flows is called net FDI. Entry routes, automatic routes and government routes. Here in automatic routes, period approval of the RBI or the central government is not required. Example of sector with 100% FTA through automatic route like agriculture and animal husbandry, coal and lighting, exploration of oil and natural gas, airports, industrial park, telecom service, trading, etc. Government route, period government approval required and foreign investment shall conform to the condition stipulated by the government and its approval. Example of FTA prohibited sector in India. Lottery business including government and private lottery, online lottery, gambling and betting including casino, cheat fund, nidhi company activity sectors do not open to private sectors. Example automatic energy and railway operations. Significance of growing FDI inflows. Capital investment, it is a major non-debt financial resources, refusing infusing long-term sustainable capital contributing to technology transfer, strategic sector development, etc. Example, India attracted significant greenfield investments with project capital expenditure rising 25% to USD 110 billion in 2024. Exchange rate stability as on May 2025, India's forex reserve can cover 11 plus funds of import and 96% of external debt as per RBI bulletin June 2025. Sustainable finance. Example, India is by far the largest carbon credit issuer in the VRA registry. Supports composition and innovation, brings in new market and tracks best practices, marginal and technological know-how and generates employments. Reasons for fall in net FDI in India. Rising outward Indian investments. Ministry of Finance monthly economic review April 2025 noted that India direct overseas investment rose to 12.5 billion in financial year 2025. Liberalized policy example, liberalized overseas direct investment ODA guidelines 2022 allows India entity and individual to invest in foreign entities with greater ease and fewer restrictions. Increase in repatriation, RBI held that it is inadequate of maturing market where foreign investors can enter and exist smoothly. Other risks to FTA, global economic uncertainty, rising trade tensions, particularly tariff hikes by the USA, global FTA declined by 11% in 2024. Maturing investment cycle, several older FDI inflows are entering the harvest phase, with foreign companies withdrawing parts of their investments after realizing growth and probability targets. Weak global demand impacting exports. According to Global Manufacturing Purchasing Managers Index, April 2025 marked the steepest export decline since 2012. Undertaking policy reforms, stable policies in taxation along with regulatory and judicial reforms would improve the ease of doing business, resulting in higher FDI. Example, Vietnam implements 10 years economic plans to specifically offer guidelines for investments and market liberalization process. strengthening digital economy, advancing multilateral dialogues to shape coherent and development-oriented rules on investments in the digital economy. Digital economy was a key driver for global FDI, with investments rising by 14% in 2024. Investment incentives, they can be used to attract and steer capital through fiscal incentives like tax breaks, grant and subsidies. International cooperation, reforming international financial systems, multilateral cooperation to manage global risk, promoting fair investment, etc. The recent decline in net FDI is seen as a temporary result of shifting investments, not a sign of long-term problems in the economy. To retain its position as the largest FDI recipient in South Asia, India must focus on smarter capital, which is long-term, inclusive, and aligned with sustainable development.